Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that the US dollar has fallen to a 7-month low as American disinflation extends in their economy, and that is raising expectations of rate cuts in each of the Fed's remaining 3 reviews this year. US equity markets are rising on the same expectations, with the S&P 500 moving back to again challenge its mid-July all-time highs. They seem to be voting with their money that the US Fed has in fact engineered a soft landing, or better, and that trajectory from here is up on the back of an aggressive easing cycle from the Fed. However, the US Conference Board's leading indicators slipped a bit more than anticipated in July, but they also said the 6-month trend no longer indicates a recession ahead there. Meanwhile, the Atlanta Fed's GDP Now tracker still sees good 2% growth in the third quarter of 2024 for the US economy, better than the blue chip analysts that they benchmark against. And Japan said core machinery orders, which exclude those for ships and electric power companies, rose 2.1% in June from May, better than expected. It was on the back of an upturn in orders from the service sector. In Japanese yen, these orders are up 2.6% from the same month a year ago. And later today, China will release its latest review of its loan prime rates, but no changes are expected. These rates are already at all-time lows. And the lacklustre Chinese economy has sharp consequences for Australia. Australia shipped $138 billion worth of iron ore in the year to June. A Canberra report projected that to fall to $114 billion in the next 12 months and $102 billion in the following as prices continue to fall. That could leave a $3 billion hole in royalties in the Australian federal results, and the wider Australian economy will have downside risks from this too. The US Treasury 10-year yield is now just on 3.87% and down 1 basis point from yesterday, and the price of gold will start today down $6 from yesterday at $2,502 an ounce. Oil prices are down $2 at just on $73.50 a barrel in the US, while the international Brent price is now down to $77.50 a barrel. And the Kiwi dollar starts today up 0.5 cent from yesterday at 61 US cents. Against the Aussie, we're a tad softer at 90.7 Australian cents. Against the euro, up 20 basis points at 55.1 euro cents. That all means our trade-weighted index starts today at 69 and up 20 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.